Mark Gibson Humanist Channel, accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
We will discuss about the inventory management. As you know, inventory is just a part of your working capital. So inventory management, it refers to the development and administration of inventory policies, systems, and procedures necessary to efficiently and satisfactorily meet the inventory requirements at minimum cost possible. So the objectives of the inventory management is to maintain inventory at a level that best balances the estimates of actual savings, cost of carrying additional inventory, and the efficiency of inventory control. So basically, we'll talk about various inventory control and measures in this topic. We'll also discuss the right level of inventory that should be kept within within our operations. So first, let's discuss about inventory planning. So inventory planning involves determination of the quality and quantity and location of inventory, as well as the time of ordering, in order to meet future business requirements. No? So inventory planning also covers economic order quantity. So your EOQ, this is a quantity to be ordered, which minimizes the sum of the ordering and carrying costs. Let's talk about ordering and carrying costs, no? Kasi these are factors affecting your economic order quantity. So later on, we'll also discuss how to calculate for your EOQ. But then let's focus first, what are these carrying costs, no? So carrying costs, sabi, this increase with order size, no? So it includes storage costs, interest costs, spoilage, and insurance. So basically, this is just the cost included in your inventory in relation to handling your inventory. So you have storage or your warehousing costs, interest costs, spoilage and obsolescence. That's also part of your carrying costs, and also insurance. So sabi, it increase based on the order size. Definitely because carrying cost is, let's say, this is variable in terms of the size or volume of inventory that you have. Ordering cost, sabi naman, it decreases with order size. Ordering, so this includes transportation or delivery costs, admin costs of purchasing, and costs of receiving and inspecting goods. No, I think that's clear enough. So how to compute for your economic order quantity? Like I said, plus make sure that at this stage you're familiar enough on how to use your calculator, no? Kasi square root can become a little tricky depending on the calculator that you're using. So what I suggest you to do is, prior to the departmental exam or prior to our quiz, make sure to practice yourself on how to do square root functionality using your calculator. So EOQ, this is just the order size or appropriate number of units that must be ordered at the least cost. This is the optimal number of units to be ordered to maintain the minimum cost. So basically, plus when we say economic order quantity, this is the level of inventory that we must be able to keep on hand. That also considers cost element, no? So as to the carrying cost and the ordering cost. Earlier we've talked about what are the different components of carrying costs and as well as ordering costs. So now we just need to derive this data into the formula to calculate your economic order quantity. So it says here that economic order quantity is the square root of 2 multiplied with the annual demand in units multiplied by the ordering costs over your carrying costs. So sabi, well, total cost of inventories, as you know, this is your ordering cost plus the carrying cost. How to compute for your carrying cost? This is average inventory plus safety stock multiplied by the carrying cost per unit. So this is just the cost, carrying cost per unit. No? So later on, we'll also discuss what the safety stock is and how to calculate for that. No? Okay, so ordering costs, this is the number of times the company will order, multiplied by the ordering cost. So basically, this is the frequency on when to order. No? So multiply by the ordering cost per order. So you'll get your ordering cost. No? So note number one, number of times the company will order can be computed as annual demand in units divided by EOQ. And the average inventory can be computed as EOQ divided by 2. So the reason why I put it in here is just to serve as guide for you whenever there are questions in the problem that would require how to compute for the average inventory and also the ordering cost. No, so that's part of how to compute your carrying costs and as well as ordering costs. No? It's also mentioned here that when applied to manufacturing operations, the EOQ may be used to compute economic lot size. No, but then this will be discussed in length in your management accounting. But in here, the focus is really to measure on your EOQ as a part of inventory management. Okay, so let's talk about safety stock and reorder point. So reorder point is a stock out problem. The objective is to order at a point in time as not to run out of stock before receiving the inventory ordered, but not so early that excessive quantity of safety stock is maintained. So basically, we just need to identify when to reorder because we don't really want to have an excessive inventory. No? Kasi excessive inventory meaning your inventory is just piling up in your warehouse. And as you know, because of that, the carrying cost is also increasing. Why? Because we have to pay for the space. We have to pay for the warehouse. Of course, we have to pay for the insurance. Say if we loan the money to pay for the inventory, we need to pay for the interest. So those kinds of costs. Earlier we talked about the carrying cost, and it increases based on the size. So it's also the same true for the reorder point. No? So, but basically in here, we're talking about the perfect or the right time when to order. The computation of reorder point depends if lead time. So what's lead time? This is the period between the time the order is placed and received. Is constant or fluctuating. So if it's constant, reorder point is average usage multiplied by the normal lead time. If it's fluctuating, it's average usage multiplied by the normal lead time, or I plus the safety stock. So now how to compute for the safety stock? That's average usage multiplied by the maximum lead time. So we have provided here two formulas on how to compute for your reorder point, but that's really dependent on the lead time. So whether it's constant, meaning hindi nagbabago, yun at yun pa rin, or fluctuating. So kung bawa it changes from one point or one order point to another. No? So later on, we'll have sample problems to discuss this concept further. Okay, so what are the different inventory control? So inventory control, this is the regulation of inventory within predetermined level. Adequate stocks should be available to meet business requirements. but the investment in inventory should be at the minimum. The reason being is, well, I talked about this earlier because the uh, number, I mean, if you have increased number of inventory, even in your warehouse, it generates, and it would become costly for the entity. So what are the inventory control? Number one, we have fixed order quantity system. So this is an order for a fixed quantities placed when the inventory level reaches the reorder point. So in most manufacturing firm, this is kind of like a trigger point, no? So if for example the inventory level reaches this stage, it will trigger the system to order for a fixed quantity. Fixed reorder cycle system, periodic review or replacement system, orders are made after a review of inventory levels has been done at regular intervals. So again, this is part of the manufacturing flow that really estimates the level of inventory and when to order it. No? So optional replacement system, we also have ABC classification system. ABC is somewhat like, this is not your activity-based costing class in your management accounting. This is different, no? So this is just a classification of your inventory as to what? High-value items requiring highest possible control, medium cost items requiring normal control, and low cost items requiring the simplest possible control. So probably if we think of this, siguro jewelry will form part of A items. Medium cost, textiles. Low cost, siguro ito yung mga threads. Okay. Material requirement planning is designed to plan and control raw materials used in production. The demand for materials, which is assumed to be dependent on some factors, is programmed into a computer. So, material requirement planning, this is really just a part of, say, in our job order costing, we have the job order sheet, no? So it's just specifying the level of raw materials that we're planning to use or will be needed in the production. Enterprise resource planning. Ito class, this is becoming prevalent, no? This is an emerging development within manufacturing firms, no? So the use of enterprise resource planning or ERP. It integrates the information system of the whole enterprise. All organization operations are connected, and the organization itself is connected with its customers and suppliers. So one good example of ERP is your SAP. So I'm not sure if you're familiar with SAP, but it's like an accounting system that process information from journal entry to reporting. No, so it's really a good. It's a very good accounting system because it transforms information to a more usable data, no, to aid us in decision making. So, okay. So another concept of another topic on inventory control is the use of just-in-time system. So just-in-time system or JIT, this is well discussed with you in the account in your cost accounting, but as part of inventory control, this is just telling us that we're not keeping really a raw material inventory in our books because we just order from the supplier as soon as an order is placed with us, no? So in JIT, production doesn't start until order is received. That's true. And it also aims to minimize throughput time. So what is throughput time? We discussed this also. This is the processing time plus the non-value added time. where the non-value added time is simply your waiting plus transit plus inspection time. So those uh, uh, processing, I mean, time within the process that's not included in the real manufacture time of the product. No? So manufacturing cycle efficiency is simply your processing time over the throughput time. So, well, simply says that the JIT goal is to minimize throughput time. Kasi nga naman, we are trying to maximize manufacturing efficiency by cutting what? Cutting into handling or waiting time or transit time on the raw materials inventory. So JIT techniques, so increase quality of material and processes. It reduces setup times. It balances flow rates across manufacturing cells, coordinates deliveries from suppliers, improve factory layout to reduce transit time, change performance measurement and reward system to focus on reducing throughput time of entire production process rather than individual department. No? So also, I'm not sure if it's in here. Okay. Sige. So let's also talk about the advantage and disadvantages of JIT. No? So as you know, in JIT cost flow, instead of keeping 3 different types of inventory, we lessen it into 2. No, so we only have 2 types of inventories in JIT. We have raw and in process and finished good. No, but again, even in traditional costing, conversion cost still applies. Basically, conversion cost is your direct labor and all manufacturing overhead. Okay, so as work completed, transfer cost to finished goods. So from RIP or raw and in process using standard rates or specific identification, from conversion costs using throughput time or other allocation base. So if you can still recall your process cost accounting, this is simply just the passing of inventory as the department completes one, or department one completes it and transfer it to the next department. No, so if you can remember your process costing, it's really, say, complex to account for your work in process. No, especially that you have, especially if you have a number of departments. No, say you have cooking department, cutting department, and the packaging department. So in all these 3 departments, you have to account for your work in process, no? Because they have to complete the process and then transfer it to the next department. So that's why it mentions here that JIT is simpler because no work in process accounting. That's true. We'll only need to finish what's being ordered to us, and that also triggers purchase requisition. No, so we don't keep any inventory in our books. It will only just be triggered by the order placed by the customer. It focused attention on throughput time. So we've discussed about this throughput time. Basically, JIT is cutting off some slack time in the manufacturing process. So what are the disadvantages naman? So, well, since we're heavily dependent with the suppliers for on-time delivery, what if they cannot deliver on time? So it will definitely have an impact on our manufacturing flow. No? Well, it still requires periodic physical count of materials inventory, especially that it follows still the traditional reporting. No, so like what if we need to close the books? So essentially, what we're doing is we're essentially stopping the operation, we have to account for all the balances as at the end of the month, no? Quote unquote, no, putting a close to or putting a stop to the production, but in reality, we're just trying to make sure that our reporting, especially those reporting provided to statutory and third party information users are being provided on time, no? So reorganizing production can be expensive because in JIT, it has a lot of focus on throughput time. So therefore, yung transit lang from one department to another, this is being really worked on or addressed in JIT system. So imagine if your cutting department is on the other end, so it has to be reorganized in such a way that the transit time between two departments can be lessened. Okay, so with all those theoretical part or the concept portion on inventory management, let's try to apply it with the problem. No? So exercise number 1, let me read the requirements first. So number 1, what is the EOQ? So economic order quantity. Round off final answer in the whole units. Number 2, what are the total relevant costs at the economic order quantity? Use EOQ rounded off to 5 decimal places. Total relevant costs rounded off to 2 decimal places. So simply, remember, no, when we're talking about relevant costs, we're actually comparing 2 alternatives. No? So later on, we'll talk about that. And third, what are the total relevant costs, assuming the quantity ordered equals 1,000 units? Okay? Sige. Let me just go to my board. Dito yan. Financial PUP, receivable, inventory. Okay. Sige. So, isa-isay natin. So, I hope that's okay. So, Rain Lean Tags Company produces a luggage and a bag tag product and has the following information available concerning its inventory items. Number 1, annual demand. So that's 50,000 units per year. Purchase price of 35 per package. Ordering cost of 250 pesos per purchase order. And carrying cost of 10% of purchase price plus 4.5, no? So it's not mentioned what the 4.5 means here, but let's just assume this is your handling cost. Okay, so we're now ready to compute for our EOQ. So what's the annual demand? That's 50,000. The ordering cost, that's 250. Purchase price, that's 35. And carrying cost of 8. How did we compute for the 8? So basically, that's just your purchase price multiplied by 10%. Kasi nga yan, yung carrying cost. Plus 4.5. So 3.5 plus 4.5. So that's 8. So again, let's derive the formula. That's 2, yun, yung constant na 2. 2 multiplied by the annual demand, 50,000, multiplied by the ordering cost of 250, divided by 8, or your carrying cost. And then you get the square root of the number. So that's equivalent to 1,767.77. So I'm calculating it with the use of Excel, but definitely in your case, Excel file or Excel won't be available during examination. No? At saka mas mahirap Excel kasi tatype mo pa yung formula. So it's best to use your calculator. So at least just during your practice, no, in preparation for your midterm departmental exam. So okay, so that would be 1,767.77 units. Sabi dito, round off final answer in whole units. So that's 1,768. Oh, careful ha, kung ano yung nire-require. So number 2, what are the total relevant costs at the economic order quantity? Sige, pag-usapan natin yan. Basically, we're just being asked to compute for the total inventory cost. No, the reason why we put the reason why relevant cost is put in here is because we're comparing EOQ versus the 1,000 order quantity ordered in requirement number 3. No, so wag lang papalit to. Sige, let's compute for our total ordering cost. No? Sabi natin, ano nga yung formula natin to compute for the ordering cost? So the number of times the company will order. Lagay ko lang dito para hindi ka malito. So you have your annual demand of 50,000. Given naman yan. Siyempre, divided by the EOQ. Kasi EOQ, this is the level, no? Level of the inventory level at the minimum possible cost. Yun lang naman yun. No? So, you'll get the number of times the company will order. So, that's 28.28 times or simply, ano bang pinapaan sa atin? Wala pa naman dito. So, 2 decimal places. Okay tayo dyan. Multiply by the ordering cost. So, sabi dito, 250 pesos per purchase order. So, multiply by 250, you'll get your total ordering cost of 7,071. Okay? Now, let's compute for your carrying costs. So, carrying cost is your EOQ divided by 2. So, sobrang dami ko. Okay, so you'll get your average inventory of 883.88 multiplied by the carrying cost. So again, to compute for the carrying cost, that's 10% of 35, so 3.5 plus 4.5. No? So that's 8 pesos. So total ordering cost is 7,071.07. Add the 2, so you'll get your total inventory cost of 14,142.14. Will be your total cost using EOQ balances. Okay. Now, let's compute for requirement number 3. Basically, in number 3, ang pinapa-compute lang sa atin is what if we're going to order for inventory or number of inventory not equal to your EOQ. So remember, ang EOQ natin is 1,768. Pero dito, in order lang natin is 1,000. So let's try. So let's order 1,000. The same thing, no? So let's just calculate for your ordering costs. So number of times the company will order. So that's 50,000 annual demand. Okay. So in requirement number 3, we'll be calculating now for 1,000 units. No? So for 1,000 units, the total ordering cost would be 12,500 pesos. And total carrying cost is 4,000. No? Simply, we're comparing two alternatives. No? Shall we order at EOQ or any amount other than the EOQ? So it's just showing us that we'll be spending more if we order items or values other than your EOQ. Because remember, EOQ is basically the level of inventory reorder that will give us minimal cost. Okay, so Let's try another example. So exercise 2. So determine the following: annual demand, frequency of order, total inventory cost, reorder point, another reorder point if maximum daily usage is 2,000 units. And let's also compute for the safety stock. Okay. So, sige. So RCR company has a secret ingredient in its production. This ingredient costs the company 60 pesos. So purchase price, 60 pesos. And from the supplier, and requires 5-day lead time. So ordering cost is 25 per order. Okay, so you have the lead time and ordering cost of 25 pesos per order. And the carrying cost per unit is 10% of the purchase price. So meron kang carrying cost of 10% of the purchase price. So that's 6 pesos, no? So 60 multiplied by 10%. EOQ is 2,400 units, used 360 days. O class, ito medyo different yung attack, no? Your EOQ is already provided. So therefore, we need to work back in order to get what? This requirement. So number one, we are being asked to compute for the annual demand. O, sige. Ito, yung usual lang naman na ginagawa natin. No? So kung ang isang factor is not provided, we have to work back. Eh alam mo naman, 'di ba, pag square root ka, this is just basically multiplying or dividing the number the number by itself, no? So gawin natin in reverse format naman. So you have your EOQ multiply by itself. So 2,400 multiplied by 2,400. So that's 5,760,000 multiplied by carrying cost. Kasi 'di ba ang kunin ko to para hindi nakakalito. Oops. Remember yung formula natin. Kaya kung minultiply yung carrying cost kasi sa original formula is dinidivide natin. So, kaya nga naka-reverse format lang. Ano? So, that's 34.56 million. No? Divided by the ordering cost. Again, ordering cost is given, pero dahil nga reverse format tayo, originally, dun sa original formula, we multiply the ordering cost. So, this time, we divide it. No? Kaya, so makukuha natin is 1,382,400 divided by 2. Again, dahil nga nag-work back tayo, originally it's being multiplied by 2. So ngayon, divide by 2. So we have now your annual demand of 691,200. Ngayon, para makasigurado na tama yung calculation natin, I think of course, computein natin kung talaga bang ang makukuha natin na EOQ is 2,400. Talaga ba? So ito. So, kunin ko muna 2 multiply by annual demand. Oops. Multiply by, ano sabi? Ordering cost. Ayun. Tapos, over 6. 6 yung carrying cost. So, this one divided by 6. Ay, kunin ko na ngayon yung square root. Ayun. So, same. 2,400. Ibig sabihin, tama yung ginawa natin. Okay? So, that's EOQ. That's 2,400 units. Okay? So, question number 2, frequency of order. With your frequency of order naman, this is already provided no, in our discussion earlier. Sabi natin, how to compute for your frequency of order or reorder point here. Kunin ko lang to. Anyway, so that's your annual demand of 691,200 divided by the EOQ. So that's 288 times, no? So basically, what we did here is following the concept of EOQ. Remember EOQ, this is the uh, number of units to be ordered at minimal cost, no? So given the EOQ, ilang beses ba tayo dapat umorder? Ganun lang naman yun, no? So that's your annual demand divided by the EOQ. So we'll get 288, meaning this is the frequency of order or the number of orders to be made. Third, ito, kabisado natin paano mag-compute ng total inventory cost using EOQ. So, again, let's derive the template. No? Dahil may template na tayo, let's just get the given information. So ordering costs first. So number of times the company will order. Alam na natin yan from the requirement number 2. But again, let's calculate for it. No? So that's 691,200 annual demand divided by the EOQ. So that's 288 times the company will order. Multiply by the ordering cost. How much is the ordering cost? 25 per order. So that's 7,200 pesos. So carrying cost naman, so that's EOQ divided by 2. So that's 1,200. That's your average inventory. Multiply by the carrying cost. So in this case, 6 pesos. That's 10% of 60. So total ordering cost is 7,200. Add the 2, so your total inventory cost is 14,400 pesos. Okay, so requirement number 4, reorder point. So to compute for your reorder point, so that's annual demand, 691,200 divided by 360. So here, it says here, use 360 days. No? So you'll get your average daily sales. Okay ko lang para hindi makakalito. Multiply by the lead time of 5. So reorder point is 9,600. And what if daw the maximum daily usage is 2,000? So simply, imbis na ang gamitin natin is average daily sales computed by dividing the annual demand by 360. Kasi ang kinocompute natin dito yung daily average sales. You know? So instead of using 1,920, the maximum daily usage is 2,000. So multiply by 5. So that's 10,000. That's your reorder point. Okay. And for your safety stock, it's simply your average daily usage na compute na natin dito kanina less the maximum daily usage. So that's 80 less, I'm multiplied by the lead time of 5. So that's 400. Okay. So that's exercise number 2. That ends our discussion on inventory management. Actually, inventory management focuses on the EOQ, no?
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!